Hi, good morning and welcome to a new week. Welcome to Ask the Experts, an award-winning daily series which runs from 8:30 to 9 to help small businesses. If you have any questions, ask them in the comments of the live feed. If you need any more advice, please join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. So during this session, we'll be running a poll, so please do engage with it, and I'll reveal the results at the end. It's very nice to be back again to Ask the Expert. My name is Glenn Collins. I'm an FCCA, and I'm Head of Technical Advisory and Policy at ACCA. ACCA is a global professional accountancy and tax body, and many of you will have accountants who will have studied and are regulated by ACCA. Look out for ACCA or FCCA. Today, really topical area we're discussing, and that's finance. So we know finance is at the heart of every business's ability to survive and to grow. Why is having your finance in place so important? Well, actually, profitable businesses fail because they run out of cash. Also, SMEs lose out because they turn work down because of insufficient cash flow. So why is this? I mean, as you start to grow, most businesses will need more cash. And that's because as you grow or you restart, you'll spend more money on assets, spend money on stock, spend money on employees. You'll have increasing future sales, and that's cash coming in. But it means when you go, you're paying cash flow catch up. More goes out than actually comes in. For example, in week one, I spend £100 on stock. In week two, I get 200 in from selling the stock, and I spend £150 more on stock. I've actually spent £50 more than I actually have, but I've made a profit of £100. So you need to finance that £50 that you've spent more. Intuit research has found that 1 in 7 small business owners have been left unable to pay employees because of cash flow issues. And that equates to a huge 2.2 million people in the UK not being paid on time. 38% of business owners have suffered cash flow problems and have been left unable to pay debts. And on average, and this is an astonishing finding, small business owners lose a whopping £26,000 by turning down work because of insufficient cash flow. So we're going to take you on a journey which explains some of the areas you need to be aware of, need to know a bit more about. And we'll be looking at types of finance, so looking at the journey and the common finance options. The right finance for your business, and businesses vary in size, aims and financial requirements. And we'll look at some of the best financial options for businesses, or highlight some of those options for businesses. And then that topic that will probably leave many of you switched off, but it's really important, a good business plan. And actually that's not only convincing your lender about the finance you need, but it's actually also looking forward and knowing what you might need in the future. So actually predicting your finances. So moving on to the types of finance. Well, many of you may have accessed some of those bounce back loans through the last year. They were launched in May 2020, and they were introduced to help smaller businesses impacted by coronavirus. They were ranged between 2,000 and up to 25% of business turnover, with a maximum amount of 50,000. The bounce back loans are now closed for applications and top-ups. They closed on 31st of March 2021. As we said, businesses first began to receive those loans in May 2020, and the repayments come due from May 2021. So there's a 12-month period from when you had the loan to actually when you start to need to look to repay some of that. Lenders have started communicating as part of a pay-as-you-grow option. Some of the bounce back loan scheme repayment plans, and they've started those, and they'll do those around 3 months before repayments actually start to commence. And lenders will inform their customers about this pay-as-you-grow option. So wait until you've been contacted by your lender, but do be aware of actually some of the conditions that sit under this. So the scheme offers flexibility. So it allows a delay in repayments for 6 months, meaning businesses can choose to make no payments on their loans until up to 18 months after they originally took them out. There's measures where you can then look to extend the length of the loan from 6 years to 10 at the same fixed interest rate. So a really good area where people will want to look and want to say, what do I want to do with those loans? Is that part of my mainstream finance going forward? Make interest-only payments for 6 months. And you can use that 3 times during the loan. I mean, I would say that is a really incredibly valuable option running through. And it's something where you would want to do if something significant occurs. So don't use it as something, perhaps a short-term alteration, but actually being able to just make interest-only payments and not repay part of that loan for a period of 6 months, have that option 3 times, means if you've got something serious happening to your business, perhaps another period of lockdown, then you could actually access that coming through. And then request a 6-month repayment holiday once during the term of the loan. Another really, really valuable valuable area running through. So what's coming in place? So we've got a new support system, a new loan system coming in place, and that's recovery loans. They allow up to £10 million per business. They're offered the terms are at the discretion of participating lenders. Government guarantees 80% for the lender, and as a borrower, you're obviously repaying 100% of that debt. And that scheme is open until December 2021. You need to show then you would be viable were it not have been for the pandemic, that you've been adversely impacted by the pandemic, and you're not in insolvency proceedings. And what you can get is actually a term loan and overdraft between £25,000 and 10 million per business. You can also get invoice and asset finance between £1,000 and 10 million per business. And those loans are available for differing times. So 3 years for the overdraft and the invoice finance facilities, and 6 years for the loans and the asset finance facilities. So we highlighted at the start that there's these there are many options actually available for businesses and looking at the types of finance. So it is always worthwhile looking at actually the best fit. There are those government loan schemes which really influence the market, and actually some of those repayment terms which will really influence. But it's important to look at the type of finance, the speed of arranging finance, and actually the cost and the length of time needed. So there's a variety of different finances available. You've got barter, you've got equity type of finance, you've got credit card, cash flow finance, invoice factoring, friends and family, grants, HP and leasing, loans, options, overdraft, peer-to-peer finance, stock market, trade credit, and trade loans. Just one area which might be of interest is trade credit. Actually, it's quite often ignored. It's probably the easiest and most important term of short-term finance available to business. So trade credit means, many things, but a really simple definition is the arrangement to buy or sell goods or services on account without making an immediate cash or cheque payment. So trade credit is a helpful tool for growing businesses when favourable terms are agreed, when a business supplier with a business supplier, it puts less pressure on cash flow than immediate repayment. And the type of finance can be really helpful in reducing and managing the capital requirements of businesses. The reverse situation also needs to consider, and that's simply where you put in place customer or client favourable credit terms. So put in any of the terms agreed with your customers or clients, and that actually helps reduce some of the trade trade credit negotiations with them. Let me explain that a bit more. If you have credit terms of around 30 days with your supplier, and trade credit terms of 45% with your customers or clients, the net deficit will be 15 days. It's that net amount that affects the business's working capital and a negative capital situation, which will need additional funding. So if we use that example from earlier, we mentioned in the introduction at the beginning, for example, in week 1, I spent £100 on stock, but instead of week 2 getting £200 from selling the stock, I now get that a further week later, but I still need to spend another £150 on stock. So at the end of the 2 weeks, I've actually now spent £250 more than I have, but I still made a profit of 100, and I'm still owed 200. Well, I'm owed 200. That's the big difference running through. So actually really, really important when you're looking at those areas of actually how that impacts. So common uses of trade finance. Really quick and easy to arrange. Typical amounts involved will be depend entirely on your trading activity, but it's recognised, but do negotiate it and do spend time running through that. There are 3 main costs involved, and that might be the loss of an early payment discount. It might be, spoiling the relationship if you fail to agree to certain trade credit terms, and some working capital if you've perhaps not organised your working capital to address some of those. So if you're paying out earlier, then you're receiving goods through. Time frame, it's not unheard of, really genuinely quite quick, and it's quite often agreed over the phone, and then you follow up in writings or agreements with your clients running through. So advantages: incredibly easy to organise, easy to maintain, and it's recognised, used for most supplies of goods and services. You're also protected, importantly, by the late payment legislation. So just quickly moving on, we've said other areas: right type of finance for your business. Obviously, look at cost, need, use, security, timing, and actually when you need that. So in terms of timing, actually look at the speed of obtaining finance. That's one of the most important areas running through, and there are a number of different areas that you can look for those and obtain those. So typically, bank loans can take quite a long time. So we mentioned the speed of trade finance, but some overdrafts can take substantially longer, several weeks or up to 3 months if you've got various forms of security. And business plans, don't forget about that business planning piece. Make sure you have a good cash flow agreement in place, because cash flow is the lifeblood of your business, as we mentioned earlier, and good cash flow will always be important. If you don't look after your cash, really don't play that cash flow catch up running through. So we've got a few questions coming through now. So let's have a look at the questions. So Kalem has said, I find it more common to hear about success stories of companies than about all the companies that fail. From your experience, what would you say are some of the common mistakes to avoid to not fail? Well, I think that's really great question. One of those is plan your trading out. It sounds exceptionally boring, but with anything, actually look at some of those cash options running through. Make sure you've got some of the cash coming in. A large number of businesses do fail because they in fact overtrade, and they haven't got that backing and that resource in place to make sure that they're protected from that. So a bit of that comes down to some incredibly, boring bits like planning going through, but you've got some great software. You'll be using your QuickBooks software running through. Speak to your accountant and actually relieve yourself from some of that boring burden, so you can concentrate on the business area, and actually you can have some really good advice and know where you stand. So we've got another question running through, and that's as a newly started business, I'm unsure my company even has a credit score. Is this important to think about and build up from the start, or can it wait till we've been trading for a while? Companies in the tech sector. Well, I think it is always good to look at those finance options. What you don't want to do is find out you don't have any ability running through to gather credit. I would say make sure you have a bit of a relationship, or you start to build a relationship with your finance provider running through. Actually, don't forget to speak to your accountant. We have many of our accountants who actually work with many of the finance houses and advisors to actually help businesses raise the necessary finance that they actually need. That is a normal part of an accountant's job moving forward. So I think a really good area that you need to look at is putting that planning in place, getting somebody else to actually deal with that. So Cassius has said, what do you think are the opportunities for small businesses as the country goes back to some sort of normality? I am really hopeful for an awful lot of small businesses. I think small businesses have that great ability to be exceptionally nimble, and we've seen many of them moving through these times and adapting really, really quickly to this. Now, with that, it's about making sure that you're not caught out yourself running through, and that's why I've come in with these, almost like words of warning and moving into those places to say, look, do a bit of that boring planning, but actually don't lose that great entrepreneurial spirit and adaptability that small businesses have running through. I think a lot depends upon some of that finance, and if you're lucky enough to get a bounce back loan, look at how you're going to use that over the next years. Engage with that lender and say, right, how do I want to push this out? When do I want to take some of those holidays running through? How will that actually help me expand and deliver more through to businesses? Isabella has come in. I think we've heard the phrase cash is king. As my company grows, I'm debating if I should hire more people or keep saving to have reserves for the future in these unpredictable times. Really, really great question running through. It's always tough, and you're looking and going, should I hire more? Should I push something into reserves to save me off for the future? Could actually I invest in assets and perhaps take advantage of some of those tax schemes that the government has promoted to rocket start some of my business? I think you would always look and go, what are my ambitions? What do I want to do going forward? How do I want to grow my business, if indeed I do want to grow my business? If you do, then it's actually saying, how do I take advantage of this? And some of that is going and saying, okay, I'm taking that bit of a gamble. I'm hiring people. I'm investing in more assets running through. What I would say is then use finance and overdraft and loans and whatever assets you've got within your company. You might have some areas where you can lease or raise some finance on some of those, or you might have some better factoring running through where you can actually utilize some of those resources. So putting yourself in the best place. So I'm not sure whether we have Many more questions coming through at the moment. I mentioned the recovery loans and about the eligibility. There's a question in there about that. Happy to cover just that again briefly. So the new recovery loan available until December 2021. You need to show that your business would be viable had it not been for the pandemic, that it has been adversely impacted by the pandemic, and it's not in a insolvency proceedings. So a lot of those conditions are being worked through by some of the main lenders running through at the moment. So do have do wait for those with some of your lenders. Do ask some of your lenders about some of that recovery loan scheme as it comes through. So we've got a message from Ivan, which says, me and 2 other people are setting up our first company in a couple of months. We're strong when it comes to sales and marketing and tech, but none of us have any financial background. What's your top financial tips for somebody setting up a new company? All invested money to keep us going for 1 to 1.5 years. Well, I mean, great investment and great backing. Actually, what I'd say is what I said at the start of this: get somebody to help you with it. You've got your software in place. You're getting that information through. Make sure that you engage with an accountant to make sure you've got your business set up in the right way, i.e. the right structure running through, but actually also in terms of get somebody to share some of that finance load. If it's not an area you really enjoy doing, it's something that will always be done late at night or weekends or put off because there's something better. And actually with your software, you can do that so you get the information almost immediately, and it's automated. And that all depends upon how it's all set up and actually your needs and wants going forward. So speak to your accountant running through there and get them helping to set things up in the way you really need it. So we've got another message coming through, and it says, me and my partner are working on a business plan with hopes to get our investment to expand our business. In your experience, what are some of the key ingredients to get right when building out a solid business plan? The forecast is so far the hardest part. It's been a difficult year. Absolutely. I mean, it is obviously incredibly difficult putting together a decent forecast running through, because we've had so much uncertainty. So we haven't had that stability running through. So you can only make it on a series of assumptions. And what I would say is there are some elements of what makes up a good business plan running through. And that's, think about the information you're out there, which you're really proud of and you want to tell people about. That's something where you don't want to lose that. You don't want to lose that direction going through, that you've got that vision going through for your business. You also want to tell people a bit about your skills and your aspirations running through there. Many people will look at that as terms of that finance availability. So there's some good bits there to say, okay, how are we going to work through this? And actually also, what happens if it doesn't go quite to plan? So you might go, well, I originally planned with my particular product to sell for X, but should I need to go into the market, I can drop the price down by 5% or something and still make a reasonable margin run through. So look at that and build in some of those elements running through. It will show any lender or finance provider that you're taking in and you're thinking about some of those complex areas. And then that cash flow, when we say put in that cash flow plan, have that running through so you know actually where are my pinch points. Particularly if you've got a seasonal business or any business where you might have some of that cash going through in a inconsistent way, actually make sure that that's in place. Don't forget that example I showed you with that very simple trade credit, how slight delays suddenly cost you running through. So let's run into next question running through, and I've got a question here. If my business has cash flow problems since the pandemic hit, and even though I think it can pick up in the future, the next couple of months bringing uncertainty, I've had to get rid of some employees and take on more admin tasks myself, including a bigger role over finance. Do you have any top advice on how to become financially stable again? I mean, really, really tough, and obviously being hit by an uncertainty which you couldn't predict, you couldn't look at, running through has a major effect running through on on your profitability, on your cash flow. Actually, when you're looking at it, what you're doing is you've looked and you said, right, I need to now build for the future. So you've taken those decisive actions about saying, I need to scale my business differently. So I practically less employees, maybe less on some of the assets. What I would do is have a really good look at where the business stands at the moment, what assets actually you've got that you could leverage going through, and perhaps, I know it's really hard to say spend some money during a really difficult financial time, but actually just go and maybe talk to your accountant or talk to a recovery expert such as an insolvency practitioner and say, actually, what are you seeing in the market? What should I be considering at this particular phase? And we've got final question coming through from Natasha, and that's, what would be your top tips for someone starting a new business as we come out of lockdown? Well, I'm going to sound slightly optimistic here. I'm going to go, there are some really great opportunities for small businesses coming out. As we said, nimble, being able to direct yourself, reacting to the marketplace coming forward. I would go back to that boring element again. Get your cash right, get it sorted. Make sure you have that vision running through, and then utilize the support that are out there. We've mentioned during some of the finance that is available, there are grants available. Look and do your bit of research, or speak to your accountant or another business advisor, and find out what's available within your region with some of those grants, with some of those investments with assets running through. So actually you utilize those. So we mentioned at the very, very beginning a poll, and the poll results are in, and we asked you, how has the past year impacted your company's finance? 25% of you said positive, and 75% said were far less positive. I mean, no surprise there with how that has been impacted running through. I mean, it is a really difficult time for businesses. It just emphasises that importance about putting in place those next measures, particularly as you come out of that recovery. Because don't forget those options. Small businesses fail. Actually, profitable businesses fail as they grow. And actually, that really shocking piece from the Intuit piece of research, £26,000 in turning down sales. And I don't know about you, but that would be one of the really hard things I would always look to and say, I'd never want to turn down sales. That's been a rapid run through of business planning and cash flow. If you want to contact ACCA practitioners who can help you with finance options and business plans, go to our website, which is accaglobal.com, and to find an accountant section. You can also find accountants on the QuickBooks site and look for those with ACCA or FCCA. And coming up, you've got some more great entertainment coming up for the rest of the week. Ask the Expert tomorrow is Joel Gladwin, and that's Head of Policy for Codec, representing startups and scale-up tech companies. in the public policy debates in the UK. So tune in to get advice from a startup and scale-up tech spokesman. As a reminder, if you need any more advice, join the official Intuit QuickBooks SMB community on Facebook, and accountants and business experts are on hand. So, really enjoyed answering your questions this morning. Great questions coming through, and thank you so much for those. Take care, and I hope you all have a very profitable week. Thank you.